Yes, students, we are done with section 16 and 17, which talks about conditions to claim credit, and section 17 actually talks about restrictions to claim credit or blocked credit. We have done with it completely. Now we will get into section 18, which talks about availability of input tax credit in special cases. Whatever is covered here is some special cases, guys. In that situation, sir, is credit available? If yes, how is it and how much to claim? We will see it. Listen, guys. Chirag, if my outward supply is exempt, can I claim the credit on my inward supply? Can I claim the credit? No. Same way. If I am not registered under GST, can I claim credit on my inward supply? No. On my inward supply, I would have paid tax because my supplier was liable to pay tax. He collected from me. But as I am not registered under GST, can I claim the credit? No. That is important thing. Under section 16 itself, we saw a person should be registered in order to claim credit. Next one. Sir, if I use my inward supply for my personal purpose, can I claim the credit? No, sir. All these are the conditions which we already seen. Sir, then what is covered under section 18 is not the normal cases, special cases. Special cases here means the transformation cases, guys. Transformation cases means, sir, I was unregistered. Now I am getting registered under GST. Can I claim the credit? Yes. But they are giving you some benefits also. What is it? We will see. Or else, sir, I was under section 10. When I was under section 10, can I claim credit? No. But now I am moving towards section 9. From 10, I am moving towards 9. Once I move to section 9, can I claim credit? Yes. Same way. Listen here. My outward supply was exempt. Can I claim the credit? No. Now, all of a sudden, government came and withdraw this exemption. They told from tomorrow it is taxable. Does government has that power? Yes. They removed the exemption and they told it is taxable. So my outward supply, which was exempt, now became taxable. From now on, can I claim the credit? Yes, I can claim the credit, guys. Is that clear? Yes. Or else vice versa scenarios are also there. For example, sir, I was under section 9. I can claim credit. But now I am going to section 10. Can I continue to claim credit? Sorry, no. Same way. Sir, my outward supply was taxable before. Can I claim credit? Yes. But now government has added exemption for this. Whatever I am supplying, they told it is exempt now. Once it became exempt, should I pay GST on it? No. That means, can I claim credit of my input tax? No. Clear? This we covered as transformation cases, which is named here as special cases, guys. So section 18 has various subsections. First, we will enter with subsection 1. So we will try to understand that. I will explain it with some examples, guys, so that you will understand it better. So please observe it carefully along with the dates. First example, guys, it is connected to registration chapter to the extent possible required now. I will explain it in detail. Again, we will learn in the next chapter, that is registration chapter, guys. Okay. Assume I became liable for registration under GST on 1st January 2026. When a person will become liable for registration is actually given in section 22 and 24 of CGST Act, which we will learn in next chapter. Assume I became liable to obtain registration under GST on 1st January. Okay. I applied. Guys, as per section 25, once a person become liable, he need to apply for registration within 30 days. The day I become liable, within 30 days from there, I need to apply for registration. Okay. Assume, guys, I applied for registration on 15th January. Is it within 30 days? Yes. Now they granted me registration. Who? Department. They granted me registration on 20th January. Now in rule 10 they are telling, please observe, even rule 10 is a part of registration chapter. Rule 10 is telling, if a person who is liable to be registered has applied for registration within 30 days, then the effective date of registration will be the date on which he was liable. The date on which he was liable. So on what day this boy was liable or this guy was liable is on 1st January 2026. So, will he be called as registered person from 1st January or on 20th January? It is from 1st January, guys. As per what? As per rule 10. As per rule 10. Okay. That means, let me take my own example. I was liable for registration on 1st January. I applied for registration on 15th January. They granted me registration on 20th January. I am called as registered person from what date? 1st January. Why so? Because I applied for registration within 30 days. Okay. Rule 10 is telling because is registered person from 1st January. Okay. Now listen, guys. On or after 1st January, if I purchase anything, can I claim credit? Yes, because I am a registered person. But what about any purchases made before 1st January? Means if I have purchased anything before this, I was an unregistered person. Can I claim credit? No, sorry. Credit was not available. Why? I was unregistered person. Credit is not available for unregistered person. But in section 18, they are telling we will not give credit before this. But whatever stock you are having on 31st December, that is immediately preceding day. From what day I am called as registered person, people? 1st January. Preceding day is what? 31st December 2025. Whatever stock of raw material, WIP, that is work in progress, and finished goods I have, when I would have purchased it, obviously before this date. But when will I use it, people? When will I use it? On or after 1st January, right? Yes. For example, if it is a raw material purchased before 1st January, as on 31st December, end of the day, it is remaining as closing stock. So when I would have purchased it? Before 1st January. But it is there as closing stock on 31st night. When will I use it? In my production process. On or after 1st January. I am already registered. So as this raw material will be used in the manufacture of my output, if I sell this output, when will I sell it? After 1st January. Should I pay output tax on it? Yes. So that means on this purchase of raw material, whatever credit I have paid or else whatever input tax I have paid, can I claim the credit? Yes. Same way. Assume there is a work in progress on 31st December. Means I started working on it but not yet completed. Now on 31st December, can they sell it in the market? No, sir. It is a semi-finished goods. Who will buy it? So on 31st December, assume it was just 50, 60 or 70% complete. Remaining portion, when will I complete, people? On 1st January or after that? So when will I complete it and sell it? On or after 1st January? On or after 1st January? When I complete and sell it, I am already a registered person. Should I pay GST on it? Yes. In that case, whatever input tax I have paid on the purchase of this, can I claim the credit on it? Yes. Same way, finished goods. Sir, few goods were manufactured, sir, on 31st December, but we couldn't sell it because there was no customers. So I was having it as a closing stock of finished goods. On what day? 31st December. If I am carrying it to the next day, it becomes opening stock. When will I sell it now? On or after 1st January? When I sell it on or after 1st January, I am a registered person. Should I pay output tax on my outward supply? Yes. In that case, will they give credit on this finished goods, whatever I have paid on my inward supply? Yes, guys. Hope you understood. Logically, very right. Why? Because even though I had purchased it when I was unregistered, when will I use it, people? When I am registered, when I am liable to pay output tax. So, in simple, whatever stock of raw material, work in progress, and finished goods is there on the preceding day of effective date of registration, credit is allowed. This is special part. Sir, listen here. Once I am registered, they will give credit for anything I purchase after 1st Jan. Will they give credit? Yes, nothing special in that. I am registered. Anything I purchase after I am registered, they will give credit. Nothing special in that. Sir, then what is special, sir? They are giving credit on whatever stock I had on 31st December. When did I purchase it, people? When I was unregistered. But now they are telling, I will give you a credit. Go and enjoy. The only reason is I will use it, even though I have purchased it before 1st January, I will use it on or after 1st January for my business. Credit is allowed. Credit is allowed, guys. Is that clear? Yes. Next, let me go to next scenario. Sir, what if the registration is applied after 30 days? Section 25 is telling what? Apply for registration within 30 days. Assume I am liable for registration on 1st January, but I applied for registration on 14th February. I purposely wanted to apply on that day. I applied it. Is it applied within 30 days or after 30 days? After 30 days. Rule 10 is telling if an applicant has applied for registration after 30 days of E becoming liable, the effective date of registration would be the date on which registration is granted. I applied on 14th February, assume registration is granted for me on 20th February. So I will be called as registered person from what day, people now? 20th February. Now, if I purchase anything on or after 20th February, will I get credit? Yes, I will get credit. Sir, what about the stock I am having on 19th February? Sorry, we can't give you credit. On 19th February, I have some stock or even before that. Can I claim the credit? No. Sir, what about on 31st December 2025? No credit, sorry. We will give credit only for the purchases made on or after 20th February. That means special case is not applicable here on? No. Why, sir? You didn't apply within the time we told. So we don't give you credit. Clear? See, if you follow what they told, they will tell, we will give you one benefit. Clear? See, even if you apply after 30 days also, they will grant you registration. Because anyway, they want to welcome you under GST bracket. But will they give the benefit of ITC on the stock? No, they will not give it. Is that clear? So that means section 18 covers only this case. It will not cover this case, guys. Then why did you explain so? Because you should know. You should know it. This, they didn't cover it in section 18, people. I will just mention. 18, they didn't talk about this. That means this special case, this is not a special case. Okay, this is not a special case covered under section 18. Even though you have applied for registration, you have been granted registration. But as you didn't apply within 30 days, sorry, we will not give credit for the stock what you have on the preceding day. Is that clear? Yes. This is when I became liable for registration and I applied for it. Next scenario is, sir, I was not at all liable for registration. I voluntarily want to take registration. Maybe Bakra. Okay, yes. Even though I was not liable, I was not covered in section 22 also. I was not covered in section 24 also. What will section 22 and 24 tell? Who should get registered under GST? I am not covered under both the sections. Can I go ahead and take still voluntary registration? Yes. Assume I voluntarily raised a hand, sir. I want to take registration. Okay, they will tell apply. Anyone who wants to come, they will welcome. Why? Revenue will increase. For whom? Government. Okay. Assume on 15th June, I applied for voluntary registration, even though I was not liable. Assume registration is granted on 18th June. I will be called as registered person from what day, people? I will be called as registered person from what day? 18th June. Now, on or after 18th June, anything I purchase, will I get a credit? Yes, provided I satisfy all the conditions given under section 16 and it is not restricted or blocked under section 17. Okay. Sir, what about the stock? Will I get any credit for my stock? Yes. Same like my first example. Now, I am called as registered person from what day? 18th June, which is the preceding day, 17th June. On 17th June, whatever stock of raw material, work in progress and finished goods we have, I can claim the credit of it. When did I purchase it? When I was unregistered. But when will I use it, people? When I am registered. So they will give the credit. Obviously, when will you claim this credit is on or after 18 June only. Because you are liable to pay output tax from when? Only from 18th June. Against that, can I adjust the credit of this stock on which I have paid an input tax of any amount, sir? CGST, SGST, or IGST, any amount. Can I adjust the credit, sir? Yes. So is this covered in section 18? Yes, guys. This is covered. The first one is covered. Whereas the middle one, not covered. Not covered. They're trying to penalize you, telling as you didn't apply within 30 days, sorry, we will not give credit. Sorry, we will not give credit. Yes, sir. Let us see, guys. Let us see. Pay attention. Subsection 1, 18 subsection 1. Subject to such conditions and restrictions as may be prescribed. First one, 18(1)(a). Totally 4 special cases are here. We have as of now discussed only 2. 18(1)(a) first. Person who has applied for registration within 30 days from the date on which he became liable for registration and has been granted such registration. Guys, once I am liable for registration, I have to apply for registration within how many days? 30 days. Where is it given? Section 25. If I follow that, here they are giving me the credit. Here they are giving me the credit. What credit, sir? Goods entitled as on. You can claim the ITC on inputs held in the form of raw material, work in progress, or semi-finished goods. Finished goods as on the date immediately preceding the date from which he became liable to pay tax. From what day did I become liable to pay tax in this case? 1st January. Not this one, this one. 1st January 2026. What is the preceding day, people? 31st December 25. Okay. Why? See, simple logic. What was the closing stock on 31st December will become automatically what? Opening stock on 1st January, which I will use or sell on or after 1st January. Okay. One illustration is there. We will see that. Second one. Let me go to second one. 18(1)(b). Person who isn't liable to register means I was not at all liable, but obtains voluntary registration as per section 25 subsection 3. In that case also, can I claim the credit? Yes. You can claim the ITC on inputs held in the form of raw materials, work in progress, finished goods as on the date immediately preceding the date of grant of registration. Okay, so simple. So date of grant of registration in this example was what, guys? The third one. Date of grant of registration is what? 18th June. I am called as registered person from what date? 18th June. RP stands for what? Registered person. So preceding day is what? 17th June. Whatever stock of raw material, WAP and finished goods we had on 17th June, will credit be allowed on it? Yes. Credit will be allowed on it. Or then illustration 2 is there. We will see it. Guys, in both these cases, they are telling credit should be claimed within 1 year. What is it? Last column. ITC must be availed within 1 year from the date of issue of tax invoice by the supplier. In simple, the goods should not be older than 1 year. Sir, I had purchased it 1.5 years back, 2 years back. I'm still having it in stock. Can I claim the credit? No. They told it should be purchased within 1 year. It should be purchased within 1 year, guys. For example, assume here we are taking the stock on as on what day? 17th June. Correct? 17th June. It should be purchased within 1 year. Sir, what if it is 15 months old, 18 months old, 20 months old? I had purchased it 2 years back. It is still there in the stock on 17th June. Can I claim the credit of it? No. They are telling simple, very simple. If the goods was purchased for more than 1 year, which is still there in stock, you cannot claim credit on it. You cannot claim credit on it. That means it has to be purchased within 1 year of this date, guys. 1 year before. 1 year before 17th June. Is that clear? Yes. Okay. One important thing, guys. One important thing. They covered only the stock of raw material, WAP and finished goods. Sir, what about capital goods? What about capital goods? Fixed assets. For example, sir, some fixed assets was purchased here, sir. Or let us take it as the word which they are using in the law. Capital goods is purchased before this, sir. Or even here. Capital goods was purchased before this, sir. I have paid GST on it, so can I claim credit? Sorry, no. They are not giving credit on capital goods. Only on raw material, work in progress, and finished goods, guys. Let me write here. Let me write it here. Capital goods. Okay, what I will do is I will write capital goods and scratch it. There is no credit available on CG. CG stands for capital goods. Very good. Here also. Here also same story. I will write CG and I will scratch it. Scratch it means what, guys? Sir, no credit on the capital goods purchased before. Now listen. Sir, what if I purchase capital goods after this date? or even year. After this date, can I claim the credit? Yes, for that credit is available. But whatever capital goods I have purchased before this, even though I will continue to use it after 1st January, still they're telling, sorry, no credit. No credit, people. Is that clear? Yes. We have illustration for both of these guys. We will see. Illustration 1 and 2. Come to the illustration which I have given below. First one. Mr. B becomes liable to pay tax on 1st August and he applied for registration on 17th August. Guys, on what day he was liable? 1st August. On what day did he apply? 17th August. Did he apply within 30 days? Yes. So what is the effective date of registration, people? What is the effective date of registration? 1st August. 1st August. He will be entitled to take ITC effective on 31st. 31st July. You write July. July is missing there. 31st July on inputs held in the form of raw material, work in progress, and finished goods, except capital goods. Did they give capital goods there? No. So it is understood on capital goods which is purchased before on or before 31st July, no credit. Sir, what if capital goods is purchased on or after 1st August? Credit can be claimed. Credit can be claimed, guys. Next, second illustration. This is on voluntary registration. Mr. Z applies for voluntary registration on 1st September and is granted such registration on 9th September. Guys, what is the effective date of registration? 9th September. 9th September. He will hence be entitled to take ITC effective on 8th September on inputs held in the form of raw material, WIP, finished goods, except capital goods. Except capital goods. So in both the cases, capital goods is not covered, huh? No, sir. So better, when you are also studying, it should be easy, no? So what you can do is, you can just mention your CG and scratch it. Or else, one second, do one thing. You better put a flower bracket here. That would be better. For both 18.1a and 18.1b, put a flower bracket and write capital goods not covered. Capital goods not covered. That would be better. CG not covered. Or if you want, better use full forms. Or else later you will not understand what is CG. You will think central government. Capital goods not covered. Understood? Huh? Logical. Guys, you understand with proper concept. You can easily remember. If you try to mug up whatever ITC on that day, this day, available, not available, you cannot remember it. So that is why I am also trying to explain with an examples, guys. Now make a note of this. Make a note of this. For this, you can silence. You can give an heading 18.1a. Spider-Man. And for this, you can give an heading 18.1b. 18.1b, guys. Listen here. Silence. See, this is covered in 18.1a. I have given along with an example. Okay, sir. Sir, what about this? Is it covered in section 18? No, it is not at all covered in section 18, but still I have mentioned. Good to know. Then the last one, third one, it is covered in 18.1b, voluntary registration. You can also give 18.1b, voluntary registration. VR, voluntary registration. Got it? Huh? Yes, sir. So we are done with two special case, that is 18.1a and 18.1b. Guys, in both these cases, a person was unregistered under GST, but now is coming under GST bracket by taking what? Registration. So for him, we are giving the benefit of input tax credit on what and all? Raw material, WIP and finished goods, but not capital goods. Next, we have two more special case. What is it? 18.1c and 18.1d, guys. Please be careful. Here, actually the person is already registered. But is registered under which section? Section 10. Now he is moving to section 9. Now when he go to section 9, will he get a credit? Yes. But sir, what about the stock he was having on the preceding day? Will he get the credit on that also? Yes, they're telling he will get it. But stock of what and all? Listen carefully, very important. Stock of what and all? Raw material, work in progress, finished goods, plus capital goods. Here even capital goods is covered, guys. Sir, what is this? 18(1)(c)? Guys, simple. Here the person is moving from section 10 to section 10 to is moving from section 10 to section 9. Section 9. Let me explain this with an example. Listen. 18(1)(c). Guys, assume I am a person who was registered under composition scheme. Even if I have to pay tax under section 10, should I get registered? Yes, registration is mandatory. Registration is mandatory, irrespective of my turnover. Okay, sir. Sir, I was registered under section 10. I was paying tax under composition scheme at composition rate. Can I claim ITC, sir? No, sorry. On your inward supply, even though you have paid tax at normal rate, you cannot claim credit. That is what department told me. Sorry, because as you are a composition supplier, you cannot claim credit. Okay. Now assume, guys, on 15th February, my turnover crossed the threshold limit. What is the turnover for? Composition scheme, guys? 75 lakh, 1.5 crore, 50 lakh, depending upon which scheme, which state. Agree? Yes, sir. Assume on 15th February, I became ineligible for composition scheme. Ineligible for composition scheme means my aggregate turnover crossed the threshold limit. Or else I started supplying outside the state. Immediately I have to move out of section 10. Correct? Yes. On 15th February, I became ineligible. Immediately I need to move to which section? Section 9. So from 15th February itself, I am under section 9. I will pay tax at what rate? Normal rate on my outward supply. Whereas on my inward supply, can I claim the credit, people? Yes. On or after 15th February, whatever inward supply I will take, I will be eligible to claim credit. That is normal case, sir. What is special in this, sir? On 14th February, whatever stock is there of raw material, WIP, finished goods plus capital goods, credit is available even for that. Credit is available even for that. Guys, listen. When did I purchase all this? When I was under composition scheme. When I was under composition scheme, they told ITC not available. No, sir. Yes. But did I use it when I was under section 10? No. I am having it as a closing stock on what day? 14th February. That is the preceding day on which I became ineligible for composition scheme. Now all this was purchased before 14th February or even before 15th February. But when will I use it, people? On or after 15th February. So all this will form part of my outward supply and I need to pay output tax as per section 10 or as per section 9? As per section 9. So on this, if I have paid any input tax, can I claim the credit? Yes. They're telling credit is available. Credit is available. Do you remember same example we learned in section 10 composition scheme? Clear? This story and all I had given. Person was covered under section 10. If he is covered under section 10, I have told you what and all is an advantage, disadvantage. Tuck, 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 I will read it. Listen, assume I was under composition scheme. Pay GST on composition rate on my outward supply. On my inward supply, can I claim credit? Sorry, no. Now, other things and all. What are those, sir? I have given here in red color. Pay GST out of pocket. Can I collect tax from my recipients? No, sorry. Then, should I issue tax invoice or bill of supply to my recipients? Bill of supply. Okay. Then, should I pay tax monthly or quarterly? Quarterly. Then, can I make the supply outside the state? No. I can purchase from outside the state, but I cannot sell outside the state. Okay, sir. And I will file 2 annual returns, no monthly returns. I will pay tax quarterly and I will file payment statement quarterly, but returns is annually. Nothing is monthly. Okay, sir. But the problem is I cannot claim input tax on my inward supply. Same way, whoever has purchased from me also, cannot claim credit. This point was even mentioned in 17.5 also. Correct? Yes, blocked credit. Okay, sir. Sir, I want to start fresh life now, sir. Too much of restrictions for me. Why so much restriction? I want to fly, sir. Bird. I want to be a free bird. Okay. On 15th February, I became myself ineligible for composition scheme. Or else, voluntary also I can go out. Voluntary, sir. Even though I was eligible, 10 is very restriction, sir. Okay. I'm ready to pay tax at higher rate. Give me the freedom. So I'm going out. On what day? 15th February. Okay. On 15th February, I have some responsibilities. What are those? This we already covered, guys. File an intimation for withdrawal from the scheme in form CMP04. CMP stands for composition within 7 days. Within 7 days from where, people? 15th February. Okay. Then there we also learned, there only I covered. Actually, this point is given in section 18. If you remember, I told this provision is covered in section 18. I will teach you again in that. Yes. Now, sir, whatever stock he has on 14th February, no, sir, he can claim the credit of it. But what is the proof for it? When did he purchase? From whom did he purchase? How much GST he paid? Please give the details of this. Please give the details of this. In what, sir? ITC 01. Provide stock details of raw material, WIP, finished goods, capital goods as on 14th February within 30 days in ITC 01. And this provision is covered where? Not in section 10. It is covered in section 18, which we are doing now. Is that clear? Sir, why are they asking stock details, sir? Because they are giving me the credit on it. So I should give all the details. When did I purchase this? From whom did I purchase? How much GST I paid? So they will cross check all the conditions and they will allow me the credit. Is that clear? And here also they have told that 1 year condition is there here also. This goods, whatever is there, should not be older than 1 year. It should have been purchased within 1 year. Within 1 year from where? 14th February. If it is already older than 1 year, thank you. No credit. You can use it for business, but no credit. Got it? Yes. Sir, from 15th February, fresh life, sir. New life. So, what are the things, sir? I am under normal scheme under section 9. Pay GST on my outward supply at what rate? Normal rate. Whatever rate is applicable for my goods or services. Is ITC available on my inward supply? Yes, it is available. Sir, is this covered in section 18? No, no, this is normal. Okay, this is not special case. What was covered in special case was this one. This one. Clear. Once I come under section 9, anyway I am eligible to claim credit. What are the few things to take care, sir? Can I collect the tax from my recipient once I am under section 9? Yes. Then can I issue tax invoice? Yes. As I am collecting the tax from my recipient, I can give the tax invoice. Next, can make interstate outward supply. Can I sell outside the state? Yes. Then disadvantage. Pay GST monthly, file GST returns monthly, or if I am following QRMP. You remember QRMP? Then quarter. But tax payment is always monthly only. Even if I am following QRMP, name of QRMP, full form of QRMP is what? Quarterly returns, monthly payment. So if you are under section 9, you have to pay GST every month. You also need to file returns every month. But if you are a small supplier and all who wants to follow section 9, then there is one scheme called QRMP, where you can file the returns quarterly but pay tax monthly. What is it? We will understand in returns chapter, guys. Last chapter. Then the last one. Can claim ITC on inward supply and can pass on the credit to the recipient. This is an advantage. Clear? Both has its own advantage and disadvantage, guys. I need to look into which is more beneficial for me and I will go for it. But please be careful. Section 10 is available only if I am a small supplier whose aggregate turnover is within certain limits. Is that clear? And assume I am a small supplier. Is it mandatory for me to follow section 10? No, no, no. It is optional. If I want, I will go with it. No, sir, I am ready to pay tax at normal rate. Can I follow section 9? Okay, no problem. You can follow it. Yes, sir. Understood? Yes. Let me read the provisions now. Registered person means I am already registered. Yes. Who ceases to pay tax under composition scheme and switches to what? Regular scheme. Guys, regular scheme means which scheme? Section 9. Section 9. He can claim the ITC on the inputs held in the form of raw material, WIP, and finished goods, as well as, guys, this is special, capital goods. as on the day immediately preceding the date from which he became liable to pay tax under regular scheme, section 9. Guys, in my example, I became liable to pay tax as per normal scheme from what day? 15th February. We need to take stock as on what day? Preceding day, which is 14th February. Okay, sir. Let us see next one. 18.1D. Let me explain that with an example, then I will come to it. 18.1D. Very nice, guys. Listen. How beautifully all this, guys, actually this all examples or provisions will give you more clarity about GST. Clear? Because two things are covered in single provision or single exam. Okay, what is it? We will see. Assume, guys, I was the supplier. My outward supply was exempt. My outward supply is exempt. If my outward supply is exempt, can I claim credit on my inward supply a month? A month? Can I claim credit on my inward supply? A month. Can I claim credit? No, sir. I cannot claim it. Why, sir? Because on my outward supply, tax is 0. So on my inward supply, even though I have paid tax, I cannot claim credit. I cannot claim credit. But now assume, guys, on 1st October, government withdrew the exemption. They didn't add the new exemption. For example, let me take pen now. I was supplying pen. Supply of pen was exempt. It is actually not exempt. I am just giving example. Okay. Supply of pen was exempt previously. So I supply pen. My outward supply is exempt. Can I claim credit on my inward supply? No, sir. Okay. We understood this part. But assume, guys, on 1st October, they removed the exemption on pen. They removed the exemption on pen. Means from 1st October, if I sell pen, am I liable to pay GST? Yes, I should pay output tax. As my outward supply is taxable from 1st October, am I eligible to claim ITC? Yes, I can claim ITC. Okay. Both the scenario understood, huh? Now, what is special, sir? Preceding this date, which is that date, 30th September, if I have any stock of raw material, WIP, finished goods and capital goods, when did I purchase it? When my outward supply was exempt. Did I claim credit? No. Why? Because I was not eligible. But as I am having it as a stock on 30th September, when will I use it? On or after 1st October. On or after 1st October, my outward supply is taxable, people. So that means, can I claim the credit on all this? Yes. Credit is available. Understood? Yes. So even on whatever stock I have on the preceding day, the date on which my exemption is withdrawn, sir, can I claim the credit on all this? Yes, including capital goods. Including capital goods, guys. Okay, so let me write like this. Exemption now became taxable. Exemption became now taxable. 18.1D. Registered person whose exempt supplies become taxable. Guys, observe the words. See, 18.1A and B didn't start with registered person. They started with what? Person. Why? They were not registered. Now they are taking registration. Whereas 18.1C and 18.1D, are you observing? They started with registered person. Means these guys are already registered, huh? Yes, they are already registered. Sir, if my outward supply is exempt, should I take registration? Maybe I am supplying 2-3 things. One is exempt, one is taxable. In that case, should I take registration? Yes. Clear. So in this case, the person was registered. Now his exempt supply became taxable. So that is why, guys, can you observe the difference between AB and C and D? AB was, you are now coming for the tax bracket. We will give you benefit, but not fully. We will give you benefit only for the stock of what? Raw material, WIP and finished goods, no capital goods. Whereas C and D, you are already in tax bracket, but you were not paying tax previously. Or even if you are paying, you are paying under section 10, lower rate. Now you are ready to pay at higher rate. We will give you more benefit. More benefit in the sense, for ITC on stock of raw material, WIP, finished goods, plus capital goods. Okay, let me read it. 18.1D. You can claim the ITC on the inputs held in the form of raw material, work in progress, finished goods and one extra thing, capital goods. Relatable to such exempt supply as on the day immediately preceding the date from which supply become taxable. We have an illustration for each of this. We will see that. But let us first know the provision. Okay. Guys, did you understand both 18.1c and 18.1d? Yes. Effect is same, but scenarios are different. Clear? I was under 10, now I came to 9. My outward supply was exempt, now it became taxable. The impact or effect is same. Scenarios are different. Okay. Fine, sir. Here also that 1 year thing is there, huh? Yes. Above we had that 1 year thing, no? Same thing is copy pasted here also for C and D. What is it? ITC must be availed within 1 year from the date of issue of tax invoice by the supplier. By the supplier. If the goods is already older than 1 year, sorry, no credit for it. No credit for it, guys. Yes. Please observe. Okay, let me take this example only. Assume this is 30th September 2025. No, sir, I had a stock of finished goods which I had produced or which I had purchased on 20th June 2024, sir. 20th June 2024. Is it within 1 year? Is it within 1 year? Hello, people. Yeah, I am asking you only. I repeat, if these items are purchased 1 year before this, credit is available. Credit is available, guys. So assume finished goods was purchased or produced. When, sir? Let us take it as purchased. I am a trader, so I have purchased the finished goods. When, sir? Let me take it as 20th June 2022. 20th June 2022. Older than 1 year. Is credit available? Sorry, no. Sir, I had purchased it on 1st June 2025. 1st June 2025. Is credit available? Yes. It is within 1 year. It is within 1 year. Abba. Thanks. Chalo. Now, one more story is there. Guys, for both 18.1c and 18.1d, they are covering capital goods, right? They are covering capital goods? Yes. They are giving you benefit of ITC on capital goods, but not fully. But not fully. Why, sir? Simple logic. You would have purchased it somewhere here. You would have used it also, no? You would have used it. Guys, please pay attention. Please pay attention. This is important. Assume I purchased capital goods here. I paid GST on that 30,000. How much? 30,000. And before 1st October, I have already used it for 2 quarters. I have already used it for 2 quarters. How much credit they will give is not full 30,000. They will not give full 30,000. They are telling before 1st October, you already used it for 2 quarters, right? We will reduce 5% for each quarter. We will reduce 5% for each quarter. That means how much credit can be claimed, guys? 30,000 minus 5% into 2 quarters, which comes to 3,000. How much credit is allowed, people? 27,000. ITC available. Did you understand? Yes. Sir, what if it was used for 1 quarter, 10 days? 1 quarter, 10 days. Still you have to take 2 quarters. Even 1 day in the quarter, you need to take full quarter. Is that clear? And quarter calculation here, Ramesh, quarter calculation here is standard quarters. For example, April, May, June, July, August, September, October, November, December, January, February, March. Is that clear? Yes. Now what happens? No. Assume, sir, 1 month will fall in the previous quarter, 1 month will fall in next quarter. How many quarters should I take? Assume, simple, I am telling. Before 1st October, assume it was used only for 2 months. Only for 2 months. 1 month will fall in 1 quarter. Another 1 month will fall in another quarter. How many quarters should I take? 2 quarters. Sir, 1 quarter will have 3 months. No, sir. I told you, even part of the month, even part of the quarter, you have to take full quarter. Is that clear? And quarter calculation is not from the date of purchase. It is standard quarters. Clear? April, May, June. For example, okay, let me put like this. Assume the capital goods was purchased on 28th April. 28th April. Should we count first quarter also? April, May, June. Should we count it? Yes. Next example. Assume capital goods was purchased on June 25th. Should we count first quarter? Yes. April, May, June should be counted. Clear? Simple, guys. Even one day in a quarter, we need to take full quarters. Is that clear? Yes. Let me take one more example. Assume, sir, before 1st October, it was used for 3 quarters, sir. Or 3 quarter, or else 2 quarters, 2 months. How many quarters should I reduce? 3. 15%. So 30,000 minus 15%. Remaining is allowed. Remaining is allowed. Next one. Next, please listen. Sir, before 1st October, it was used for 3 quarters, 15 days, sir. How much should I reduce for? 4 quarters. How much totally? 20%. So 30,000 minus 20% comes to 6,000. So 24,000 available. 24,000 available. Now you guys answer. You should answer. Okay, now question is for you. Did you hear? When I ask, you will be like, not for me. Not for me. This guy is there now. He will only ask question. He will only answer. Chalo. Correct, Yeman. Chalo. Listen. Shh. Before 1st October, Yashas, are you hearing? Before 1st October, it was used for 5 quarters, 10 days. How much should be reduced? How much should be reduced? How much should be reduced? How much percentage? I repeat, before 1st October, before 1st October, it was used for 5 quarters and take it as 10 days. How much credit should be reduced? How much credit is available? Tell me. How much credit is available? 6 quarters you have to reduce. 0. Credit available is 0. Why? It was more than 1 year old. Twist kahan hai? Kidhar hai? Understood. Hey, silence. Sir, 5%, master of it. Listen here. If it is older than 1 year, no credit. Because students do this. They have given in the question, assume 5 quarter, 6 quarter, 8 quarter, 9 quarter, 10 quarter. You will reduce 9 quarters into 5%, 45% reduce, remaining 55% claim. Please be careful. Obviously, guys, if it is more than 1 quarter, you should understand. Sorry, if it is more than 4 quarters, you should understand that it is more than 1 year older. Correct? Chalo. ITC on capital goods will be reduced by 5% per quarter of the year or part of the quarter thereof of usage from the date of invoice. So from the date of invoice, we need to check till this date how many quarter is already over or part of the quarter. And for each quarter, how much should be reduced? 5%. 5%. Sir, it was used, assume it was just to be purchased 10 days before, sir. 10 days before this. In September. How much should be reduced? 5%. 5%. Understood now? Yes. Okay. 1 year thing also we have studied. Yes. And this 1 year is common for all four special cases, guys. Yes. Let me read it. As per Rule 40, registered person shall, within a period of 30 days from the date of becoming eligible to avail the ITC, that is input tax, credit, under section 18.1. 18.1 covers all the 4 special cases, or within such further period as may be extended by the commissioner, shall make a declaration electronically on the common portal in form GST ITC 01 to the effect that he is eligible to avail the ITC as aforesaid. Means what they are telling is, this is a common rule for all 4. In all these 4 cases, they are giving credit on the goods which is there in the stock, right? You need to give the stock details in ITC 01 within 30 days. Within 30 days. So in simple, if I have to tell, sir, here they are giving the credit for the stock, right? I need to give the details of this stock within 30 days. In ITC, 01. Same way here also. Same way here also. Within 30 days, should I give the details of all this stock? Yes, this stock. I need to give it. In ITC, 01. Actually, I had already mentioned this. Clear? This is as per what? Rule 40, read with section 18. Sir, what about the first two cases? They are also same story, people. Here they are giving the credit of the stock of raw material, WIP and finished goods as on this date, no? Within 30 days, we need to give the details of stock in ITC 01. Even in first case. Sir, they are giving the credit for the stock as on 31st December, right? Within 30 days, we need to give the details of all this. Clear? Why, sir? Obviously, guys, when I had purchased this, there was no credit available. Now they are giving me the benefit of claiming the credit. Please give me the proof of it. That is what the department is asking. You tell from whom did you purchase, how much GST you paid, on what day did you purchase, and what is the GST IN of that person from whom you have purchased. All these details you give, we will give you the credit. Is that clear? Yes, sir. Then subsection 2, I have already covered it in the last column. A registered person shall not be entitled to take input tax credit under subsection 1. That is all for special cases. In respect of any supply of goods or services or both to him after the expiry of 1 year from the date of issue of tax invoice relating to such supply. Here the maximum time limit for availing the ITC is 1 year. Invoices more than 1 year old are not eligible for taking the credit tax. Not eligible for ITC. Anyway, this point I had already given here only in the last column. Is it common for all the special cases? 181A, B, C, D. Yes, it is common. Clear? Please be careful. Guys, listen. You don't get confused. This is common for all four. You can see in the below also I have given. Even this is common for all four. But this one, capital goods, this is relevant only for C and D. Because they are giving the credit on stock of capital goods only in C and D. Did you underline that? Yes. For the first two, we put the flower bracket and we wrote capital goods not covered. Whereas for C and D, is it covered? Yes. Please know the exact differences, because after studying all four together, there is a chances that you might get confused between the clauses. Yes, we have illustration 3 and 4 for this. We will see that. Come to the illustrations, guys. We are already done with 1 and 2. 3. B, a registered taxable person was paying tax under composition scheme up to 30th July. However, with effect from 31st July, B becomes liable to pay tax under regular scheme. Regular scheme means you can just underline and write section 9. Section 9. B will be eligible for ITC on inputs held in the stock and inputs contained in semi-finished or finished goods held in stock and capital goods as on 30th July. Because from 31st July is transforming from section 10 to section 9, guys. ITC on capital goods will be reduced by 5% per quarter or part of the quarter thereof. From what date? From the date of invoice. Yes. Date of invoice of which asset, guys? Capital goods. Means from whatever date you have purchased till the effective date, we will see how many quarters have elapsed. Accordingly, for each quarter or part of the quarter, we will reduce 5% each. Illustration 4. Mr. C acquired a capital asset on 1st April 2025 and used it for the production of exempt supplies only. Now in November 2025, his supplies become taxable. Means what, sir? Maybe exemption is withdrawn. Exemption is withdrawn. The cost of the asset was 2,50,000 and GST 18% was charged on it. So what is the amount of GST paid on the purchase of capital goods, guys? 45,000. How is it, sir? Value is 2,50,000 into 18% GST, 45,000. Can we claim full credit? No. When it was purchased, people? 1st April. Now, when the exemption has been withdrawn? November. Take it any day on November. So, how many quarters you check? April, May, June, July, August, September, October, November. So, even part of the quarter, should I take it fully? Yes. So, totally how many quarters, people? 3 quarters. So how much should be reduced? 15%. 15%. Now the number of quarters of usage that have elapsed between, guys, date of purchase, consider that only as date of invoice. Or if the date of invoice is given separately, count it from there. Okay. So how much has elapsed between April to November, guys? 3 quarters. Actually, the last quarter is part of the quarter. Still, you take it fully. Okay. So how much should be reduced totally? 5% per quarter. So totally for 3 quarters, 15%, guys. 15%. So what was the total input tax? 45,000. From that, how much we need to reduce? 15%, which comes to 6,750. Remaining allowed also? Yes. 38,250 allowed. Allowed. Note that this ITC would be available from the date immediately preceding the date from which supply becomes taxable. That is somewhere in November. They didn't give the exact date. So when can he claim the credit of 38,250? Once his exempt supply become taxable. He is eligible to claim credit of how much? 45,000? Huh? No, 38,250. Rule 40 of CGST Rules 2017 states that amount of credit shall be calculated by reducing the input tax at 5% for every quarter or part thereof. It shall be calculated from the date of invoice for the capital goods. Is that clear? Which we already saw. Which we already saw, guys. Yes. Okay. So for each of the case, I have given one example, guys. For each of the case, I have given one example. Guys, see here. Stock details has to be given in all the 4 cases in ITC 01 within how many days? 30 days. So where is it given? Rule 40. Same way, sir, this one they told no. So ITC on capital goods has to be reduced only in the last 2 cases, C and D. How much? 5% for each quarter or part of the quarter. Where is it given? So Rule 40. Clear? See, when the question is especially on theory and all, guys, you need to mention all this. If by chance, if you don't remember the number of days and all, you can write within prescribed time. Within prescribed time. Or if you know exactly, please write it. Because definitely your answer will have more weightage then. Okay, sir. Fine. So 18.1 and 18.2 we have done with. I want you guys to make a note of this. This downward, this part not required because we already made you guys take down this where when we were covering composition scheme. But anyhow, I have connected and I have explained it. Just make a note of this part. You can also give an heading composition scheme to normal scheme. Composition scheme to normal scheme. Guys, see, silence. 18.1 C. C means what? Composition to normal. Composition to normal. Okay, this one. Next, one more is there, that is with respect to 18.1D. That is when exemption is withdrawn. Withdrawn. 18.1D, guys. I have just given one example here about capital goods. Whatever I have mentioned in blue color, if you want, you can take down that. If not, you can ignore that blue part. Blue, see, listen here. Blue part, you will ignore, not this blue. That is only important here. I am talking about this one. Okay, listen. I will just explain. Guys, before 1st October, a capital goods was purchased and GST paid on that how much? 30,000. And before 1st October, it was used for how many quarters? 2 quarters. Okay. That means, is full 30,000 credit available? No, sir. 30,000 minus 10%. That is 5% for each quarter. So 2 quarters into 5% comes to 10%. Hope you guys understood. Clear up. So if you want better understand, anyway, I have given one illustration in the provision book also. If you want, you can also make a note of this. This is usage. Yes, guys. We are done with 2 subsections. Now we will get into subsection 3, guys. Whatever we are covering is under section 18. We are still under section 18. Now we will learn subsection 3. When there is business succession, guys. Sir, what is it? Guys, assume A Limited has been acquired by B Limited. Now you know all the assets of A Limited and liabilities of A Limited will be taken over by whom? B Limited. I repeat, A Limited has been acquired by whom? B Limited. Now all the assets and liabilities of A Limited will belong to whom? B Limited. Now if A Limited has any unutilized input tax credit, can it be taken over by B Limited and can they claim it? Yes, but only if it is unutilized ITC. Sir, assume A Limited had 5 lakh credit. They have already utilized 4 lakh. How much is unutilized? 1 lakh. Now, how much can B Limited can carry over and use it? 1 lakh. Sir, 5 lakh, huh? No. What is already used? How can you take it? Clear. And guys, if I have an unutilized credit, it is like asset for me. Why so? I can carry it and adjust it against my output tax. So, is it acting like my asset? Yes. It might have credit. See, it is called as credit ledger, but still, it is like an asset for me. Why, sir? I have paid this on my inward supply. I have paid it for which credit is available. So, it is as if it is an asset for me till I use it. Clear? So, in case of business succession, if predecessor has any unutilized credit, can it be carried over by the successor and claim it? Yes, guys. But for this, there is a procedure to be followed. That is, the predecessor has to give the details of what is the unutilized ITC he has. First, he has to give the details. Then, it will auto-populate to the recipient. That is the successor. He will claim it. He will claim it, guys. Yes. Let me just give an example. Okay, first let me read this. Treatment of input tax credit in the event of transfer of business. We also call it as business succession. Where there is a change in the constitution of a registered person on account of sale, merger, demerger, amalgamation, lease, or transfer of the business with the specific provisions for transfer of liabilities, the said registered person shall be allowed to transfer the input tax credit which remains unutilized. Underline that. So, the credit can be transferred which is unutilized in his electronic credit ledger to such sold, merged, demerged, amalgamated, leased or transferred business in such manner as may be prescribed. As may be prescribed, guys. Sir, as may be prescribed means where is it prescribed, sir? In the rule. They have given some format to do this. They have prescribed it in the rule. Guys, actually, in the law, this happens even in company law also. You would have heard. Guys, in company law also, rules are there? Yes. Sir, rules, where the reference is given in the act. In the act, they would have told within prescribed time, in the prescribed way, or in the prescribed manner. Where it will be prescribed? In the rules. Clear? So wherever they give as may be prescribed, within prescribed time, or in the prescribed manner, that manner or time will be given in the rules, guys. Now, is it mentioned in the rule? Yes, rule 41. We will see that, but before that, I will just explain this with an example, guys. Now assume eBay has been acquired by Google. eBay has been acquired by Google and they named it as Gobe. They named it as Gobe, not you, the company. How can I call it? So the new entity which is acquired by Google, Google acquired whom? eBay. And they named the new entity as Gobe. Okay. Now, silence. eBay had an unutilized ITC of assume 2 lakh. They had an unutilized ITC of how much? 2 lakh. Okay. What should they do? They need to transfer it to Gobe, right? Yes. How can they do it? Gobe, take it? No. They have to file GST ITC 02, not 01, 02 for transfer of unutilized ITC. Okay. They have to give the details of this unutilized ITC in which ITC 02. And also they have to furnish a certificate certifying the transfer of business. To whom? To Gobe. Is that clear? Means they have to get it certified by whom? Chartered accountant or cost accountant? Chartered accountant or cost accountant telling, sir, it is a proof. eBay has been actually acquired by Google and they have named it as a new entity, Goobase. So it has to be certified by either chartered accountant or cost accountant, guys. Okay, fine, sir. So eBay did this. Now what should Goobay do? Now whatever eBay would have given the details in GST ITC 02, where these details would have been given in GST portal, automatically it will reflect to Goobay. So Goobay should do what? Accept the details of input and get credited ITC to the electronic credit ledger. Means this 2 lakh will get auto credited to whom now? Gube's electronic credit ledger. Okay. And inputs and capital goods, whatever has been transferred from eBay to Gube, no, they have to account it in their books of accounts. BOA stands for books of accounts, guys. This is the procedure. Where is this procedure given, sir? In rule 41. We'll see that. As per rule 41 of CGST rules, the transferor shall furnish details of sale, merger, demerger, amalgamation, lease, or transfer of the business. Who? Transferor. In my example, who was the transferor? eBay. Okay. We also call them as predecessor. Inform GST ITC 02 along with the request for transfer of unutilized ITC to whom? Transferee. Who is transferee, your people? Gube or Gobe. Let us call Gobe. Transferor shall also furnish a certificate signed, issued by practicing chartered accountant or a practicing cost accountant, certifying the sale, merger, demerger, amalgamation, lease, or transfer of the business. Guys, this is just acting as a proof that chartered accountant or cost accountant has to check, oh, actually sale has happened, and they have to certify. You know, even for your registration and all, they want certification. What if information given by student is wrong? That is why the CA or any principal or of any educational institution and all has to certify, telling whatever information has been given by the student is true, is correct. I am the proof for it. Okay. Chalo. See, the transferee. Okay, done with transferor responsibility. What should transferor do? We have already seen A, B. Now what should transferee do? The transferee shall accept the details of input in the electronic portal. Electronic portal means GST portal, guys, and shall get credited to his electronic credit ledger. So 2 lakh will automatically get credited to Gube's electronic credit ledger. The inputs and capital goods so transferred shall be duly accounted for by the transferee in his books of accounts. So whatever has been transferred, means the stock, capital goods, everything from eBay to Gube, this has to be accounted or recorded in the books of accounts of the transferee, who is Gube. Who is Gube? Chala. Subsection 3 done. Subsection 4, guys, listen. In subsection 1, we learned two special cases. What was it? Let us revisit. Subsection 1. Subsection 1, guys. Listen. C and D. What was the special cases? Person is going from section 10 to 9. Or his exempt supply became taxable. Okay, sir. But now what is covered is reverse scenario. Reverse scenario means not reverse charge mechanism. Reverse scenario. Reverse scenario means what, sir? Listen. Sir, person was under section 9. Now he is thinking to go for section 10. Can he go? Yes. But when he is going from 9 to 10, he has to go from the beginning of the financial year. He cannot go whenever he wants. He has to go from the beginning of the year, guys. Or else, sir, his outward supply was taxable supply, sir. But now, government introduced a new notification telling it is exempt. It is exempt. Guys, vice versa scenarios are covered here. Don't get confused. Vice versa. Let me repeat. 18(1)(c) will tell what? Sir, I was under section 10. Now I am moving to 9. Will you give me the credit as on the preceding day? Yes. Next. Sir, my outward supply was exempt. Now it became taxable as per section 18(1)(d). Will you give me the credit of the stock as on the preceding day? Yes. But if it is a capital goods, 5% we need to reduce. Okay, sir. Now coming to, sir, I was under section 9. I want to move to 10. Can I move? Yes, if I am eligible, if my last year turnover is within 1.5 crore or 75 lakh or 50 lakh as per the scheme which I want to follow, because there are two composition scheme. If I am eligible, they will allow me. I can go for it. Okay. Or else, sir, I was supplying, assume this remote. I was supplying this remote. It was taxable before. But from today, they told it is exempt. Government released a new notification telling supply of remote is exempt. Can it happen? Yes, any day new exemption can be introduced. In that case, What is the case? What is the benefit of ITC, sir? What is the benefit of ITC? Hope you guys understood now. Yes, very interesting. Actually, what was covered there is reverse scenario covered here. Okay. Now, guys, above, under section 18.1, they gave me the benefit. Now, they will take away benefit from it. They will take away. What is it? Guys, interesting. Please pay attention. Understand it conceptually. Now, let us take the standard date as 1st April. Guys, before 1st April, I was under section 9. Which scheme is that? Normal scheme. I was paying tax at normal rate. In that case, is ITC available, people? Yes. Provided I have satisfied all the conditions, I am eligible for ITC. Now from 1st April, I am thinking to go for composition scheme. Please be careful, from 9 to 10, you have to start from the beginning of the financial year. You cannot go whenever you want. But vice versa means, the day your turnover crosses threshold limit or you become ineligible, immediately move out. Immediately move out. That is from 10 to 9. Okay, sir. Fine. Now on 1st April, I want to go with section 10. Okay, fine, no problem. If you are eligible, go, no problem. Once I go on or after 1st April, on my outward supply, I need to pay tax at what rate, guys? Composition rate, given in section 10. Given in section 10. What is the rates? Come on, let us recall. If I am a manufacturer, trader, 1%, 0.5, 0.5. But please be careful, if I am a trader, 1% off. 1% off taxable turnover. If I am a manufacturer, 1% off total turnover. If I am a restaurant supplier, 5%, 2.5, 2.5, under 10.1. Sir, what if I am following composition scheme under 10.2A? 6%, 3.3. Correct? Yes. Okay, sir. On my outward supply, I will pay tax at composition rate. What about on my inward supply? On inward supply, I would have paid tax at normal rate. Can I claim the ITC of it? No, sir. Sorry, ITC is not available. Sorry, ITC is not available, guys. Did you understand? Yes, sir. Now listen. Sir, before 1st April, I was free to claim credit, huh? Yes. But from 1st April, I am going to section 10. I cannot claim credit. What about the stock which I have on 31st March 2025? When did I purchase it? When I was under 9. But when will I use it? When I am under 10. So they told, if you already claimed credit, please reverse. Please reverse. Fair enough, no? Above, when I am going from 10 to 9, they gave me a benefit. Now, if I take benefit here for all the goods, later, if I start using it here, then it is unfair. So they told, if you have any stock on the preceding day, that is on 31st March, what all stocks are? Raw material, WIP, finished goods plus capital goods. If you already claimed the credit on these items, please reverse it. Reverse it in the sense what? You need to add it to your output tax, pay it. Sir, no, sir, it was still available in my credit ledger. I was thinking to claim it in April. Don't claim. Don't claim it. Understood, huh? If it is already utilized, reverse it. No, sir, I was having the credit. In March, I had a credit of 2 lakh, which I was thinking to use it in April or May. Can I utilize now? No, because once I come under section 10, no ITC, sorry. Sir, I brought it from last year, sir. No problem, sir. No credit. Understood? Any one of this will be there, not both. If you already claimed, reverse. If you are not yet claimed, forget it. That's all. Okay. Understood, huh? Next. Similar provision, but different scenario. What is it, sir? Guys, my outward supply was taxable. That is, supply of remote was taxable. I was paying tax on my outward supply at normal rate. Was ITC available? Yes. But now government gave me a good news telling from 1st July, supply of remote is exempt from GST. They released a notification telling supply of remote is exempt. So from 1st July, my outward supply is exempt. Can I claim the ITC, guys, on my inward supply? No. I cannot claim ITC on my inward supply. Understanding, right? Yes. Fine, sir. We understood before and after effect. What about the stock, sir? Whatever stock I am having on the immediately preceding day, that is on 30th June, of raw material, WIP, finished goods and capital goods. When did I purchase it, guys? When I was here. Was credit available then? Yes. But I am carrying it to use it when? when credit is not available. So they're telling on this stock, if ITC is already claimed, please reverse it. Please reverse it. Reverse it in the sense what people? Add it to your output tax and pay it because you already taken the benefit. But now we are asking you to reverse. Reverse in the sense, add it to your output tax and pay it. For which month, sir? For July. For July, you will make the payment in August, right? Pay it along with this credit. Next, sir, ITC I have not yet claimed, sir. It was there in my credit ledger, sir. I was just thinking to claim it maybe next month or next to next month, sir. Forget about it. You cannot claim it. Understood? Yes. Got it now? Hello? Got it now? Yes. Chalo. Let me go and read it. Where any registered person who has availed of input tax credit opts to pay tax under section 10, means he was under 9, now he is going for 10, or where the goods or services are both supplied by him become wholly exempt, means previously it was taxable, now it became exempt. He shall pay an amount equivalent to the credit of input tax in respect of inputs held in stock and inputs contained in semi-finished or finished goods held in stock, and also capital goods. Here also capital goods covered also? Yes. Reduced by such percentage points as may be prescribed on the day immediately preceding the date of exercising of option, or as the case may be, the date of such exemption. Okay. Now, if already credit is claimed, what should we do, Gurumurthy? Reverse it. Sir, not yet claimed. It was there in credit ledger. Then, provided that after the payment of such amount, the balance of input tax credit, if any, lying in electronic credit ledger shall lapse. Shall lapse means it becomes useless. It becomes useless. And all this ITC and all, should we calculate overall or each tax wise? Each tax wise, like IGST separately, CGST separately, SGST separately. But don't worry, in the exam, if there is any question and all, they will not ask separately and all. Yeah, but actually in practical, we need to calculate it separately. You can observe, I have given it. ITC to be reversed on inputs and capital goods is calculated separately for ITC of CGST, SGST, UTGST and IGST. We need to calculate each of this separately, guys. Okay. The reversal amount is added to the output tax liability of the registered person, and the details of such amount shall be furnished in form GST ITC 03. Means whatever is the credit which is already claimed, now we need to reverse it. No, reverse means what, people? Add it to output tax and pay it, and the details of that amount has to be given in GST ITC 03. ITC stands for what? Input tax credit. Guys, in any chapter or in any topic, if you see any form number, normally the form number or the short form what they would have used is nothing but the topics. CMP we saw composition. Here we are seeing ITC. ITC means what? Input tax credit. Even in returns chapter we will see GSTR. GSTR 1 and 3b we saw. R stands for what? Returns. And in payment chapter we will see PMT. PMT stands for what? Payment. Okay. Yes. Chalo. Now, here also there is one twist for capital goods. For capital goods, if I have already claimed credit, should I reverse it? Yes. But they told, please listen, here it is different, people. You have to be attentive now. You have to be attentive now. Let me take this example only. Let me use different color, purple. Please listen. Sir, a capital goods was purchased. GST on capital goods was assumed 10,000. When it was purchased, sir? Before 1st April. Before 1st April. So credit would have already been claimed fully. Yes. Now let us take before 1st April. It was already used for how many months? Let me take it as usage. 40 months. 40 months. It was already used before 1st April for 40 months. How much should I reverse? How much should I reverse? ITC to be reversed. ITC to be reversed. What is the total ITC, guys? Or input tax? 10,000. Please listen. They're telling for the capital goods under this section. Under which section? Subsection 4. Consider the total useful life as 5 years. Total useful life as how many years? 5 years. 5 years will have how many months, guys? 60 months. 60 months. So totally 10,000 GST has been paid on capital goods. For how many months? 60 months. For how many months it is already used? 40 months. Now you tell me, for 40 months, credit was available or not available? Available. That means remaining life is how much, people? Remaining life will fall on this side, which is 20 months. How did we get 20 months, sir? 60 minus 40. 60 minus 40. Did you get? Yes. So how much has to be reversed is only for 20 months. Calculate, calculate. Huh? 10,000 divided by 60 into 20. Rupa, do it. 3,000. That's okay. You only keep. Chalo, 3,333 has to be reversed or claimed. Hello, already 10,000 has been claimed. How much has to be reversed now? 3,333. Guys, simple. The credit on capital goods, how much has to be reversed means whatever is the remaining useful life after 1st April. How much was already used? 40. What is the total useful life of any capital goods as per subsection 4? 60 months. So 60 minus 40, what is the remaining life? 20 months. So we need to reverse only for 20 months. Now listen, I will just take random other dates. Assume, sir, here it was 55 months, sir. 55 months. What is the remaining life? 5 months. So here multiplier will be 5 months. Clear? Now assume, sir, already it is used for 60 months, sir. What to be reversed? Nothing to be reversed. Nothing to be reversed. Now see, listen. In subsection 4, they told maximum life of the asset, you take it as 5 years. But some capital goods can be used for more than 5 years also, no? Hello, some capital goods can be used by more than 5 years also in real life. Yes. Assume already it is used for 7 years before this. What to be reversed? Nothing. Nothing to be reversed. Sir, still I will carry and use it, sir, under section 10. No problem. Nothing to reverse. Nothing to reverse. In simple, if the asset is already used for more than 5 years, nothing to reverse. Nothing to reverse. Even you might be carrying it and you are using it under section 10. No problem. We will not ask you to reverse it, guys. Is that clear? Yes. And this is same thing even for this example. Even for this, it is same story, guys. If it is a capital goods, on that whatever credit is already claimed, how much we need to reverse means we need to take the total life as how much? 60 months. Check out of 60 months, how many months is already over. Remaining life, we need to reverse. Remaining life, we need to reverse. RL stands for what? Remaining life, guys. It was already used for 40 months before 1st April. So remaining life was 60 minus 40, 20 months. So only credit has to be reversed to the extent of how many months? 20 months. Let me read that. Yeah, this one. For capital goods held in stock, the input tax credit involved in remaining useful life in months shall be computed on pro rata basis, taking the useful life as how much? 5 years. Total useful life as how many years, guys? 5 years. See, I am repeating again. Actually, it can be used for 6 years, 9 years, 10 years, 15 years, 20 years. Some assets will be used for very long period also. But do we consider the actual useful life? No. In the law, they have told for any capital goods, as per subsection 4, useful life is how much? 5 years. In bracket, you can just write 60 months. Just write there. 60 months. Next to that 5 years, just write it in bracket 60 months. 60 months, guys. Done now? Yes. Let me continue. ITC on capital goods to be reversed. How much has to be reversed? ITC already claimed on capital goods into remaining useful life divided by 60 months. Is that clear? And please be careful. 60 months is common, whereas remaining useful life changes from case to case. You see how many months it is already used? Remaining 60 minus that will be the remaining life, guys. Example I have given you. Capital goods have been in use for 4 years, 6 months and 15 days. How many months should we take? Even 15 days, should I count it as 1 month? Yes. So in simple, 4 years, 7 months. 4 years, 7 months. So what is the remaining? 5 months. 5 months, correct? Huh? Yes. The useful remaining life is 5 months, ignoring the part of the month. Clear? Because even part of the month, previously, we need to take full month. So ITC taken on such goods, assume C. They have not given amount. I just mentioned C. I have already claimed C amount. Now, how much should I reverse? How much should I reverse? C into, what is the remaining life? 5 divided by 60. Divided by 60, guys. Anyway, numerical example I have given here itself. When you are taking down, you can take down along with that, but maybe use different color so that you will understand it as an example. Clear? Yes, sir. Now, subsection 4 done. You understood now? And please be careful. Guys, whatever we learned, I'm again repeating because I know this will lead to confusion for many students. So let me make it very clear. Let it sit here properly. 18.1c and 18.1d was, sir, I am moving from composition, that is from section 10 to 9, or my exempt supply is becoming taxable. There, are they giving me credit or they're taking it back? Giving credit. And there, credit is given for the stock on the preceding day of what and all? Raw material, WIP, finished goods, and capital goods. And please listen, if it is within 1 year only, they are giving credit. If it is already older than 1 year, sorry, no credit. And for capital goods, we need to reduce 5% for each quarter or part of the quarter. There 60 months and all is not there. Please be careful. 60 months is only for subsection 4. Got it? Huh? Yes. Coming to subsection 4. If you want, you can just make a note there. Anyway, you have space there, no? Right? Like how I have given here. Section 9 to 10. Section 9 to 10. Just above subsection 4. Just above subsection 4, you write section 9 to 10 or taxable supply to exempt supply. Means in the heading itself, you know what I am going through this section or what am I reading in this subsection. Got it? Yes. Fine, sir. These two special cases are covered. I would have already claimed ITC. If I already claimed ITC, what they are telling? Please reverse it. Please reverse it. But is 1 year limit applicable here? No. They are asking you to reverse, boss. For reversal, is it a benefit for the government or loss? Benefit. They don't put any restriction. Even if it is 1 year older, 2 year older, 5 years older, should I reverse? Yes. I need to reverse. If I already claimed credit. But if it is a capital goods, they told maximum, we will take 5 years. If the capital goods is older than 5 years, should I drop it? Yes. No need to reverse. No need to reverse. Please be careful. The pattern to calculate credit under subsection 1 as well as subsection 4 is not same. It is not same. There it was 5% reduction and here it is 60 months totally. Please be careful with this. Okay. Subsection 5. What is subsection 5 telling? The amount of credit under subsection 1 and the amount payable under subsection 4 shall be calculated in such manner as may be prescribed. Means they're just giving route to what? Rules. Clear? Which we already covered. How to calculate and all. Even is this 60 months and all I have mentioned, no people. Actually, that 5 years and all is actually given in rules. Is actually given in rules. You can see actually in the section they told like this. Let me read it once. Please listen here. On capital goods, whatever credit is claimed, should I reduce? Sorry, should I reverse it? Yes, but reduced by such percentage points as may be prescribed. So they told as may reduced by such percentage point as may be prescribed. Where is it prescribed, sir? In the rule. In the rule. Is that clear? But they didn't give percentage and all. They gave something like months. Something like months, guys. Got it? Huh? Yes. Sure. Just a minute. I will see. Silence. Don't take a chance. Sir, you take a time to read. We will take a time to talk. First make a note of this. You can just give an heading. Section 18, subsection 4. Listen. Section 18, subsection 4. Section 9 to section 10. Section 9 to section 10. That is the heading. Then for this. Again, section 18.4 only, but from taxable supply to exempt supply. From taxable supply to exempt supply. Guys, one point to note here, very important. This point I will anyway cover it in payment chapter also, but good to know in this topic as well. If for the composition supplier on his inward supply, if RCM is applicable, he should pay tax at what rate? Normal rate or composition rate? Normal rate. Normal rate. We call that as what? Input tax. But can he claim a credit of it? No, sorry. He cannot claim the credit of it. Okay, this point we have already learned. Now what I'm trying to tell is, guys, what I am liable to pay on my outward supply is called as what? Output tax. What I have paid on my inward supply is called as what? Input tax. Now see, there can be two types of inward supply. One is taxable under FCM, that is forward charge mechanism. Means my supplier is liable to pay GST. What will he do? He will charge and collect it from me. In that case, is it called as input tax for me? Yes. Next scenario is FCM. My supplier supplied the goods or services to me, on which I myself is liable to pay GST. So liability is on my head. I myself paid it. What is it for me? Input tax. Now assume, please listen. If on my inward supply, if RCM is applicable, I myself has to pay tax, right? Yes. What is it called as? Input tax or output tax? Input tax. I myself paying, no sir. Can I call it as output tax? No, no, no. It is called as input tax. Now assume on my inward supply, I am supposed to pay tax under RCM 10,000. I have a credit of 8,000. Can I use it? No. Why? Input tax cannot be used to pay input tax. Input tax can be used only to pay output tax. Correct? So here what I was liable to pay on my inward supply, is it called output tax? No. Now what should I do is pay 10,000 through my cash ledger. Then my credit will get increased. Already I had 8,000 credit. Now total credit will be how much? Once I paid this 10,000, 18,000. Now can I claim the credit of 18,000? Yes. Against what? My output tax. Assume my actual output tax is 20,000. Against that, can I adjust this 18,000? Yes. So what I tried to tell is, listen. Sir, on my inward supply, if RCM is applicable, I need to pay it through cash ledger. Can I use my credit to pay this? No. Why? Because it is not my output tax. I have to pay it through cash ledger. But once I pay it, will I get it as a credit? Yes. I will get it as a credit. But that credit, as it is an input tax, it can be adjusted only against output tax. What is the meaning of output tax? The tax payable on our outward supply. What we pay on our inward supply will never be called as output tax, whether it is taxable under forward charge or reverse charge tax. Is that clear? Yes. We also have one point. This actually comes under utilization of ITC, which we'll be seeing next. So you can see here, one line is there. I will just read it. Input tax credit is credited to a person's electronic credit ledger. The person may use this to pay is output tax. That means whatever balance is there in electronic credit ledger, we can use it to pay what? Output tax. One important thing. Sir, I am liable to pay interest to late fee penalty. Can I use the credit? No. You cannot use credit to pay interest late fee penalty. That means even interest late fee penalty should be paid through cash ledger only. Should be paid through cash ledger. Actually, we have one more point in rule 86B. I have not yet covered this, but listen here. Yeah, this one. I will just read it out. Guys, actually rule 86B will tell like this. If rule 86B is applicable, it is not applicable always, but if it is applicable, they're telling at least 1% of the output tax has to be paid through cash ledger. So 1% of output tax we will calculate. No. Will it include the tax paid under RCM? No, sir. Why? Because that is input tax. They told 1% of output tax has to be paid through cash ledger. Plus, whatever I am supposed to pay on my inward supply, should I pay that also through cash ledger? Yes, that is separate. So you can just read that line. I will cover it. It is pertinent to note that GST liability paid and reverse charge mechanism should not be taken into account while calculating the total output liability paid through electronic cash ledger, because even when RCM is applicable, I will pay input tax through what? Cash ledger. But should I count it in output tax? No. Why, sir? Input tax is different, output tax is different. And as per Rule 86B, they will tell at least 1% of your output tax has to be paid through cash ledger. And while counting that 1%, should I include the input tax also? No, sorry, we should not include. Is that clear? Yes, sir. Let us go back. And whatever I explained now, again I will be covering it, guys, in payment chapter. In payment chapter, actually we will in detail learn about these three ledgers: liability, credit and cash. There again I will take up this topic. Now come to subsection 6. Subsection 6 of which section? 18. We have done till subsection 5, last subsection. Treatment of input tax credit on supply of capital goods or plant and machinery. Guys, what they are trying to cover here is simple. Listen. Sir, I purchased capital goods or plant and machinery to use it in my business. When I purchased, I paid GST. Can I claim the credit? Yes. If you have not capitalized the GST in income tax, they will give you a credit. Assuming I had not capitalized GST component in income tax for depreciation purpose, can I claim credit in GST? Yes. As per section 16 subsection 3, they allowed it. But after using it for few months or few years in my business, I am selling it now. I am selling it. On that sale, should I pay GST? Yes. Sir, selling capital goods is not my business, sir. It's okay. When you purchased, we gave credit, no? Now, you give credit for us. Department is telling. Credit in the form of what? GST payment. Understood? I repeat. Sir, I purchased capital goods. I claimed credit. After using it for few months in my business, I am selling it. Should I pay GST on it? Yes. Actually, selling capital goods is not my business. But still they are telling, as you have taken benefit when you purchased, please pass on this benefit now. To whom? To government. In the form of payment of GST. But how to calculate GST? They are given two ways. We need to calculate two different figures and take whichever is higher. And take whichever is higher. What is it? We will see. In case of supply of capital goods or plant and machinery on which ITC has been claimed. Okay, we have already taken ITC. When we have purchased it, the registered person shall pay an amount. Now, when he sold it, what should he pay? Equal to the input tax credit taken on the said capital goods or plant and machinery, reduced by 5% per quarter of the year or part thereof from the date of invoice. Means, sir, I purchased, listen. I purchased capital goods on which I have paid a GST of 50,000. I have already claimed a credit of 50,000. Now, after using it, assume for 3 quarters, I sold it. So what is the first bullet point? Take 50,000 minus 5% for each quarter. How many quarters I have used before selling it? 3 quarters. So how much should I reduce? 15%. So 15% of 50,000 we need to reduce. Remaining, I need to take it here. First bullet. Okay. Second one is normal calculation. The tax on the transaction value of such capital goods or plant and machinery determined under section 15. Simple. On sale value of the capital goods, whatever is the GST, take it. That's all. Sale value is nothing but the value of supply. Sir, should I pay both? No, whichever is higher. Whichever is higher, guys. Is that clear? Both the calculations we need to do and take whichever is higher, people. Okay. But proviso is telling, provided that where the refractory bricks, molds, dies, jigs and fixtures are supplied as scrap, okay, it has been sold but as a scrap, the taxable person may pay tax on transaction value of such goods determined under section 15. Guys, simple. All these are actually equipments which will be used to give design to the products or to give shape for the products. For example, sir, I am manufacturing 1 lakh pens of same size, same standard, sir. Can I manufacture in the hand? No. We will use normally equipments, molds or some devices to give same shape for each and every product I produce. So this items means whatever I was using to give shape for my products, if I put it for scrap, then this point will not be applicable. Straight away, we will follow only this. Whatever is the sale value, on that you calculate GST, just pay that. Just pay that. If it is any other capital goods, we need to check both, take whichever is higher, people. Take whichever is higher. Is that clear? Yes. One example I have given, illustration 5. Let us do it. Come to illustration 5. Illustration 5. Let me read it. X Limited purchased a machine for 1 lakh and brought it on 1st August 2025, date of purchase, and paid 12% IGST. Okay, on 1 lakh, 12% comes to how much, people? 12,000. He availed input tax credit and used the capital goods in his business. That means full 12,000 credit is already claimed. On 5th November 2025, he resold its second-hand machinery. Means whatever machine he had purchased, no, now he is selling it. For how much, sir? 65,000. For 65,000. Find out the amount of tax payable or ITC reversible in the above case. So, should we apply subsection 6 here? Yes. Check the conditions first. Sir, was capital goods or plant and machinery purchased? Yes. Was credit claimed when it was purchased? Yes. Now, after few months or few quarters, is it sold? Yes. So, subsection 6 of section 18 is applicable, guys. So, let us see. Sir, how many quarters it is already used before sale? It was purchased when, people? August. And when it is sold, people? November. How many quarters you check? Standard quarters. I told you, standard quarters. Okay. So April, May, June, we should not take it. July, August, September, should I take? Yes. October, November, December, should I take? Yes. Even part of the quarter, full quarter I should take. So how many quarters I have used, people, before sale? 2 quarters. So 2 quarters have elapsed, and therefore 2 into 5%. How much should be reduced from ITC, which is already claimed? 10%. So how much ITC is already claimed, guys? On 1 lakh, 12%, which comes to 12,000. So from 12,000, how much should be reduced? 10% for 2 quarters, which comes to 1,200. So what is the net ITC? 10,800. Let me give a notation for that as A. Let us keep it aside. First bullet done. Second bullet point. What is the sale value, people? Actual sale value, 65,000. We call it as value of supply or transaction value. On that, let us take the same rate of GST when it is sold also, 12%. Amount comes to how much, guys? 7,800. Let me give a notation, P. Now, should I pay both? No. Compare both of this. Which is higher, people? 10,800. How much should I pay? Whichever is higher, 10,800. If it is sold within the state, then 5,400 CGST, 5,400 SGST. Sir, what if it is sold outside the state? Then we need to pay entire 10,800 as IGST. I have given it here. You can see. Tax on transaction value at GST would be computed and compared to net ITC available. We already did it. A or B. The higher of the two would be payable for the disposal of goods, which is coming in our example as 10,800. If the supply is intrastate, then it should be payable in 2 parts, guys. That is 5,400 CGST, 5,400 SGST. Then, sir, what if it is interstate? Then entire 10,800 as IGST. Entire 10,800 as IGST. Is that clear? Yes, sir. So we are done with section 18 fully, guys. Did we cover all the subsections? Yes. Totally it has 6 subsections. 6 subsections.